The conventional wisdom about investing, particularly investing in individual stocks, is that it's very complicated, that it's very hard, and that the average person and the average retail investor should stick to passive investing and give your money to big, giant companies like Fidelity and BlackRock and Charles Schwab, and let their people that are supposedly and allegedly smarter than you handle your money, dump your money into a blind index, collect a management fee for basically doing nothing, and earn a very healthy living on the back of you as a retail investor. You're told time and time again that the vast majority of retail investors actually don't make money, especially the ones that invest in individual stocks. But I'm here to show you an example today. If you knew where to look, if you knew where to pay attention, and this is not like trying to pick your fantasy football running back for the weekend. It's not trying to pick against the spread in that hotly contested college football matchup this weekend either. This is actually far simpler than that. There's also a notion that Wall Street, all the information is already known. You as the retail investor are at a disadvantage, but I'm going to show you that none of that happens to be true. And it all is under the context of Taiwan Semiconductor reporting their Q3 earnings before the bell today. After reporting those Q3 numbers, shares of Taiwan Semiconductor, which have been on a tear over the past month, over 24% higher. Over the past 6 months, 49% higher. And year to date, up a shocking 100% higher. Just over the past 5 days, we've seen shares climb 9%, including today's rise of roughly 12% before the market actually closed. If you knew where to look with Taiwan Semiconductor, you could have easily predicted this, and at the very least earned 12% over the past 24 hours, and certainly higher percentages over the past couple of weeks and months, as Taiwan Semiconductor and the semiconductor industry has basically been giving clues on what to look for. A couple of months ago, back in September, in fact, just a month ago, the company announces their monthly sales totals. One of the few companies that do this. Occasionally you'll see it out of automobile companies. You see it from Costco. You see it from a handful of companies. They actually give you an update on their sales totals. So when the company reports earnings, it actually really shouldn't be that big of a surprise. So you'd be shocked when the company said back in September that their August sales surged over 33% year over year. They followed this. This was just a couple of weeks ago. In fact, it was just last week. We talked about this on our semiconductor show on our Equity Empire channel. Links down in the description below if you want to keep up to date on the semiconductor industry. We talked about how last week Taiwan Semiconductor announced that September revenue surged nearly 40% year over year. So in back-to-back months, the company announced that their sales are skyrocketing 33% last month, 40% this month. So it should come as no surprise that Taiwan exports, which rely largely on semiconductors, notched a new record high back in September as well. All of this data was available to you if you knew where to look. Taiwan exports skyrocketing. The company confirming that their sales are skyrocketing should have meant there was zero surprise that the company announced their Q3 earnings before the bell, and they beat expectations by about $210 million. Now, the expectations were elevated to show 36% year-over-year revenue growth, coming in at $23.5 billion. Obviously, a lot of that growth has to do with AI demand, as that continues to boost the outlook for Taiwan Semiconductor going forward. Yes, the Q3 results were a beat of expectations. The expectations were closer to $23.3 billion. Again, the company came in at $23.5 billion. We'll show that to you from a revenue perspective and show you why this company has such a dominant position when it comes to fabricating any type of chips, particularly the ones on the leading edge and used for AI. But I think what is sending the stock even higher is the Q4 guidance. And trust me, there's almost no one to believe that if the September or August sales figures for Taiwan Semiconductor were really strong, and then that followed with October, and then that followed with earnings basically confirming all of that today, nobody is shocked that the Q4 guidance is well above expectations. In fact, the revenue estimate put forth by Taiwan Semiconductor, $26.1 to $26.9 billion. The estimates over on Wall Street was for just $25 billion. So they're $1 billion just on their guidance. And again, remember, companies give guidance with the intention to come over and above that in the future. You see the high end, even the high end estimate for the Q4 for Taiwan Semiconductor, $25.8 billion. And I just showed you the company is guiding for 26 to 26.9. The only people that are shocked by this are the AI doom and gloomers, the permabulls, the people have been trying to tell you not to invest in the stock market, or that it's been overvalued, or that printing money and inflation and all these types of things is going to slow down the stock market. They may be right at a certain time, but if you listen to them over the past year, you've missed 100% gain on Taiwan Semiconductor. And if you listen to them over the 5 years, you've missed out on a 300% rise and a chance to change your life financially. So the revenue estimates for the Q4 are absolutely sensational for Taiwan Semiconductor. So we've got to expect that the Q1 and Q2, as you move into next year, if Q4 is going to be $26 billion, you've got that Blackwell ramp and you've got other products in the pipeline that'll likely push the subsequent revenues even higher than the current estimates for Taiwan Semiconductor. That is all contributing to the stock rising by about 12%. But like I said at the jump, this was all very, very well telegraphed by this company. Now let's jump over to these financial statements, because these are an absolute thing of beauty. We have that $23.5 billion worth of net revenue, gross profit coming in close to $13.6 billion. Your income from operations, a staggering $11.1 billion. We also got confirmation, if we needed any, that Taiwan Semiconductor will not buy Intel's foundry. And the reason why they don't have to do that is because their current business is so strong, and their relationship with the companies that manufacture with them, including Apple, Nvidia, AMD, and many others, is so strong. Look at these types of profit numbers. You pull all the way down to a net income number right at $10 billion. So folks, I can't just emphasize how strong these financials are. Not only that, if we want to throw Intel into this conversation, how big of a mountain that they have to climb. Not only a mountain, we're talking about a mountain range that Intel has to climb just to be in the same conversation of Taiwan Semiconductor. Because folks, off of $23.5 billion worth of revenue, almost half of it flows down to net income. This is the reason why this stock is worth $840 billion, which I think is close to 8 times the size of an Intel at this point. It is because the financials are absolutely sensational. Now, the company with those great financial numbers are able to continue to invest in its business, not only in its home country of Taiwan, but also now here in the United States as well, and globally. For the past 9 months, this gives you a statement of cash flows. We had operating cash flows coming in at $37.6 billion. Again, this is for 9 months. This is not just for a single quarter. That would be mega cap tech type of numbers. But needless to say, for a manufacturing company, this is off the charts. In fact, it is some of the best you'll ever see. Now, the company has to invest in these foundries, which are very complex, very large, and very, very extraordinary feats of engineering. But look at this. For the past 9 months, company had to spend, and I say just, $18.5 billion on property, plant, and equipment. That is offset, obviously, by the fact that they had $37 billion worth of operating cash flow. So, yes, it's a staggering number that they invest in property, plant, and equipment, but is offset largely by their operating cash flows. It gives the companies to do things like paying cash dividends to the tune of about $8 billion over the past 9 months. These financials are absolutely sensational, both from an operating perspective, also from a cash flow perspective. It is also the reason why, no offense to Intel, we are certainly rooting for them, and they certainly have a chance to compete. But right now, Taiwan Semiconductor is the Michael Jordan of the foundry and manufacturing of chips business, and Intel is like a kid in 8th grade who's just learning how to dribble. Now, moving over to the technical chart, it is near the top of the range. And here we are, very, very close to a multi-decade long top of the trend. This is typically when Taiwan Semiconductor reverses. If you're holding shares of Taiwan Semiconductor like I am and like I publicly recommended to our subscribers, so sometimes last year, you're probably sitting on 100% or more gain. This is the area where you do think about trimming some profits if that's what you want to do. If you want to continue to hold, you have to expect there will be some pullbacks in Taiwan Semiconductor. The first area where it is interesting is probably 175. Obviously, further back, if that materializes, we'll be pounding the table here to invest in this stock, considering the financials and considering the competition is nowhere close to where Taiwan Semiconductor is. This is an elite level company, but I showed you today that they literally telegraphed exactly what was going to happen in this quarter. They more or less telegraphed what was going to come in their guidance. Wall Street, as usual, is actually a step behind. So if you are the belief that Wall Street is ahead of the game, they know all these things, it's a Wall Street casino and you have no chance, you're actually fooling yourself. Wall Street is consistently behind the game, consistently behind the trend. That is why a stock like this, despite all of the clues and evidence that they were going to do this, is up over 12% today, and really year to date up over 80%. That is because Wall Street is just picking up that this stock is a winner. Folks, that was the show today. We'll probably be back. I think later today we got Netflix. So be sure to tune in, subscribe if you haven't, liked the video if you can, and good luck with your investments.